Same day.
Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Gragnani. He's the head of research and client engagement over at Nasdaq Dorsey Wright with a monthly update for us. As always, Jay, it's great to have you back with us. In 2019, not much of a surprise there, and I think the big question is what's next for the markets in 2020, and we'll see that on our next chart here.
Well, very quickly, 2019 is only a month and change behind us, but it was a very strong year. There's been a lot of news, a lot of headlines out, obviously so far in January. But when you go back and you look at 2019, we get a lot of questions today talking about coming off of a year like 2019. The market was up almost 30%.
And let's pull up that chart, by the way, so we can take a look at some of those returns.
Yeah,
there we go.
And so if you go back in the history of the S&P 500, it's certainly not unprecedented to see such a strong return for the S&P 500 in that year, that being 20% or more. As a matter of fact, that was the 25th time that it's happened. What's interesting is you go and you look, the biggest question is, okay, what happens after that? How does the market perform in the following year? Is there anything left in the tank to continue to move forward? And the evidence certainly suggests that the answer is yes. There is historical evidence to suggest that there's more movement, potential movement to the upside. And even if you just look at the past 40 years, so kind of the more modern era of time period, there's been 9 such occurrences, that being this 2019 being the 10th, that the market has returned 20% or more. And in the following years, what we saw happen is the average return is 12%, going after a 20% year.
Only 12%.
Only two of those years were down, and that was coming off of 1980, 1981 was down, 1990 was down, but really you have to go back to 2013 since we saw the last 20% move, and then following that 2014 was up 11% during that year. So on average 12%, certainly not guaranteeing 12%, but there is historical evidence to suggest that the market can continue to move forward coming off of such a strong year.
All right, I'll take that. Let's go to our next slide because we have a big variable this year.
Yes.
Pretty contentious presidential election.
Well, it's big variable, and obviously, recent news, we haven't seen a lot of headlines there, but certainly the presidential election year coming up in November, and that is always a lot of angst for the market. And again, when we kind of drill down and just look at the data, it's always enlightening to see what happens. And so what we did is we looked at the Dow, the S&P, and the Nasdaq Composite in election years and then non-election years. And what was interesting, when you look at the Dow and you look at the S&P, both of those indexes return better in election years than they do in non-election years. So 2020 being an election year, historically we've seen better than average returns. The Nasdaq Composite is right in line there with those returns for the S&P and the Dow in election years, although the Nasdaq Composite has seen actually, interestingly enough, stronger returns in non-election year. Nonetheless, you look at that, on average the S&P is up just over 8%, or just over 7%. The Dow Jones just under 8% on an average return during election year. So again, just because there's an election year, the obvious tendency now is to go back and think, geez, 2016 was the last election year that we saw, and we saw some volatility in there. But when you go back and you look at the body of work and you look at all election years, you see something very, very different in the markets.
It should be interesting for the Nasdaq Composite this year, particularly with conversation around tech regulation.
Yeah. Well, and you're coming, this year is coming off of a 2019 that was very strong for technology. Technology continues to carry the market higher today, and so that is very interesting to see how that'll play out this year.
All right, Jay, let's take a look at China here, because clearly coronavirus and the spread and what's happening within the Asia markets is definitely a variable that traders are looking at.
It's absolutely real, and it's caused some volatility so far in the markets this year, but not a ton of downside volatility. You've gotten some pullbacks, but as we're recording this today, most of the U.S. indexes are all hitting new highs, and so the big question out there now is, how is the coronavirus, how is this affecting the Chinese equity market? Obviously, we know very near and dear in the U.S. markets moving to new highs, but when you look at just an ETF, and this is just an iShare ETF that owns a basket of Chinese equities, and this is a point and figure chart, what we see here is that this chart is continuing to move higher. It's produced a series of higher tops and higher bottoms really over the past year, and it is trading in an overall positive trend. And so when we look at that today and we just kind of look at the data, again, we listen to what the market is doing as opposed to trying to tell the market what we think it should be doing. Chinese equities are on solid footing here in a positive trend with some pretty good support there on the chart at $60.
All right, let's take a look at the S&P 500 to wrap up here, and we're looking at point and figure chart as well, because another all-time high in fact.
Another all-time high, and this is a bit longer term chart, but again today we're notching new highs, but we've seen that very consistently, and as we talked earlier, we've seen some pullbacks this year that has caused the market to then reverse burst back up and make new higher highs, as well as those pullbacks haven't been as deep as they have been previously. And so that is all constructive, very, very constructive for the market. Pullbacks are healthy. A bit of volatility in the market is a good thing in many, many ways. And on average, I mean, the market has pulled back 10% once every single year. And so, you know, like I said, pullbacks are certainly normal. We look at the chart of this today, and you see a very healthy picture for the S&P 500, see a very healthy picture for equities in general.
All right, Jay, thanks so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.